A very good morning, good afternoon, good evening, viewers from wherever location you are tuning in. Happy to invite you for this particular week's show at The Point. The Point is a podcast chat show where we have conversations with guests and we talk about various issues affecting our country. On today's show, I am happy to have on show with me a guest whom I will give him a chance to introduce himself for the benefit of those who do not know him. Happy to have you on the show. Karibu.
Asante sana. My name is Johnson Nderi, finance professional, and can I say amateur economist? And I'm happy to be on the show. Thank you.
Thank you so much, Bwana Nderi, for that particular introduction, and once again happy to have you on the show. When I mentioned to viewers that we would be having you on show, a number of them were excited for obvious reasons, given that we could not have such conversation at any other better time than now. From where you sit, could you paint for us the status of the economy currently?
Right. So you start with the most general statistics, which is GDP, but those who follow me will know that I consider GDP as one statistic that suffers from Goodhart's law, and Goodhart's law suggests that states that when a statistic becomes a target, it becomes a bad measure of what it was initially intended to measure. So usually you look at multiple statistics to see how things are. And thankfully, Kenya National Bureau of Statistics has been collecting statistics for us, so which we can use as indicators of where we stand. So one statistic that troubles me a lot is debt to GDP statistic, and of course that's influenced largely by government spending. So you get the feeling that you know the Swahili say kukopa harusi kulipa matanga. So the borrowing we've done has been going to our spending, and GDP statistics capture government spending at cost.
Yes.
Which is interesting because the private sector is captured at market value.
Yes.
So when you lose value in the private sector, it's captured, but government apparently spending is always a valuable, quote unquote, to the economy. So anyway, but the question we are asking is, for every shilling of government, for every shilling of borrowing that government does,
yes,
has it translated to an equal shilling or more of government of GDP growth?
Yes.
And that's where one of the questions we have with regards to the GDP numbers that keep getting thrown at us, we need to query.
Okay, thank you for that intro. One of the ways to look at whether an economy is doing well or otherwise is to look at the cost of living. And if you ask majority of the ordinary folks in this country, regardless of their geographical location or their socio-economic standing in the society, they would come to a common response that the cost of living is high. And a random check at the website for Kenya National Bureau of Statistics shows that they released their inflation numbers, their monthly inflation numbers, and the numbers say it has gone down. When we compare March last year and March this year, about 3 to 4% decrease in terms of inflation. And going by I would say the generally accepted definition that inflation is the general increase in prices of basic goods and services, they expect that translate to the cost of living. From where you sit, why would the inflation numbers go down while it has an inverse relationship with the cost of living? Or is an overtime journey that we have to be patient with the government?
No, it's just a misunderstanding of the concept of inflation.
Yes.
So inflation is generated from CPI, the Consumer Price Index. And if you look at the Consumer Price Index, it's been going up.
Yes.
Even when they say inflation has come down from 9 to 5%.
Yes.
If you look at CPI, it's still been going up.
Yes.
What is different is the rate at which it's rising.
Yes.
That's what inflation is. It's the rate at which it's rising.
Yes.
So as long as inflation is positive,
yes,
prices are still going.
Okay.
Right.
So that is the slight misconception or misunderstanding that majority of the folks out here are having.
Exactly.
Okay.
So and they're right. I've argued this for a very long time. So central bank has a 5% target.
Yes.
And then it's allowed a variance of 2.5%.
Up to 7.5, yes.
Upwards or downwards.
Yes.
So for me that is quite high.
Yes.
Quite high. I'll give you an example. And this I'm coming from now, capital theory.
Yes.
One of the factors of production is capital.
Yes.
And this capital is generally goods used to produce other goods.
Yes.
That they're probably one of the most impacted factors of production by changes in monetary policy.
Yes.
So if I bought a machine today,
yes,
and obviously most likely I imported it from China or India, and I'm using this for production, and then I need remember, inflation means my currency is losing purchasing power.
Yes.
Right?
Yes.
So when it's losing purchasing power, I must earn higher than the loss of the purchasing power
to cover up,
to replace that
yes,
machine.
That has been, yes.
Yes. And this is continuous because it's not just replacing the machine, but also the spare parts and the maintenance.
Yes.
So if I don't get my maths correct, I will find that when it comes time to either repair or to replace a machine,
yes,
I can't.
You can't.
And therefore, I can't do that business anymore. The business has to shut down.
Yes.
Because now I'm losing a significant factor of production.
Yes.
So when you have high inflation, it makes it much harder, to do the math that you need to do, because you don't know what your required rate of return actually is.
Yes.
Now, if you put that in a Kenyan context, I remember, I think it's 2012 and 2015, we had inflation rates of up to 20%. And both instances, the shilling collapsed, I think, from 80 to 105 in the first instance, although Njuguna Ndungu, who was the governor at that time,
yes,
the first instance,
yes,
was able to push it back to about 90.
Yes.
And the second time it was 2015, and I think Professor Njoroge was able to return it back to 100, 105.
Yes.
Now, now you can imagine anybody who's in manufacturing, if you are not set aside properly, this will be one of the, this will be could be a debilitating, event.
Yes.
With regards to your ability to continue your business.
Yes.
And it doesn't even stop there. There's working capital. Working capital if you are importing your inputs.
The inputs, yes.
Yeah, and you probably are not able to pass on the cost
to the
consumer
eventually. Yes.
So you shut down, and we are seeing this in the logistics industry today as we speak.
Yes.
So such policies make industries like manufacturing quite
Suffer.
expensive.
Yes, expensive.
Yeah, so you you either hurt or make it impossible for private sector to accumulate capital.
Yes.
And anybody who understands growth,
Yes.
well, not the Kenyans. The Kenyans think growth is a function of putting money because they have got the circular income theory.
Income flow, yes, theory, yes.
But for us, who we when you're looking at the production function,
Us here is Austrian.
Austrian and a few others.
Yes.
I don't think Adam Smith will consider himself an Austrian.
At the risk of converting the show into a lecture. Yes.
Yeah. So the classicals, monetarists,
yes,
Austrians, we understand the importance of capital to production, and it's very simple.
Yes.
And my favorite example is consider a porter. Porter is a guy who carries goods.
Yes.
And a logistics company, for example.
Yes.
What's the difference? Both of them move goods from one place to the other.
Only one would be at a household level, and one would be at the farm level or a macro level. Yes.
Yeah, but the reason why is it at farm level is because you need that structure to be able to handle the capital required.
Yes.
To execute.
To execute that particular venture. Yes. So
the capital. The main difference between them is the capital they use.
Yes.
The porter just uses labor.
Yes. With either insignificant or zero capital.
Yes.
Yes.
This other guy has a full truck.
Yes.
An 11 million shilling machine.
Yes.
Right? To move goods.
Yes.
Right? And that's what capital does for you. It makes you more productive.
So it underscores the role of capital in growth of businesses or operations.
Exactly.
Okay.
In fact, if you go back to Karl Marx, his one fear was that, if a truck can move goods from Mombasa to Malaba,
yes,
then we will have no need for porters.
Yes.
And therefore, his concern that was that, so if we don't have workers, I mean, if only owners of capital, owners of capital will not need workers.
Yes.
And therefore, workers will be useless in an economy.
Yes.
And therefore, workers must rise up against the owners of capital, and democratize capital.
Yes.
By taking away property capital from
the owners of
capital.
Yes. Thank you. I get you. That takes me into the next segment of the conversation. Could you please clarify or share your thoughts on this? Some few months ago, when the Kenya shilling was weakening against the dollar,
yes,
the regime the government in power through its agents told us that they have had to take difficult decisions. That's why we are seeing what we are seeing, as opposed to they even accused the outgone regime of propping the shilling to achieve particular narrative. First, was there such a thing like propping the shilling? And if it was there, I know you don't hold brief for the government, but from an observer perspective, in your own interaction, do you think there was a propping of the shilling? And if yes, to achieve what did it achieve? And if the current regime is not doing the same, what explains the events that characterize the weakening and strengthening of the shilling, the behavior of the shilling in the recent months? Thank you.
The short answer is yes. The previous regime supported the shilling and did it in two ways.
So, for the benefit of the viewers, the propping of the shilling is what we are calling in layman's language supporting the shilling.
Supporting the shilling, propping the shilling.
Okay, yes.
Almost the same thing.
Yes.
So they did it in two ways.
Meaning they aided the shilling from falling. That's the meaning of propping.
Yes, trying to prevent it
from falling.
From falling.
Okay, yes. And you say they did it in two ways.
And they did it in two ways. And the first one was by selling dollars in the market. So the idea being, if you flood the market
with dollars, yes,
it will lower the price. The other way to do it, they were doing it is
so in essence, you're saying they increase the supply of dollars into the market.
Yes.
Thank you.
That's number one. Number two, price controls.
Yes.
So they were not overt. When they would come and talk to the general public, market driven, whatnot.
Yes.
But behind the scenes, they're making calls to treasury departments and whatnot. You can't trade at that price. You can't do this. You can't do that. They have punished people for no good reason. And so they created a fear in the market. But the market is a market.
So for purpose of clarity, please clarify to our viewers that when you say price control, you're not meaning the price of unga and sukari. You mean price control in the foreign exchange market.
Exactly.
Correct.
Yes. So unfortunately that happened. So let's come down to
where we are currently, and yes.
Let's go back to maybe 2003 when the shilling collapsed. So what happened then? First of all, you have to understand, and I think I alluded to this.
Yes.
With regards to, I think prior to this.
Yes.
Sure. Prior to the cameras.
Yes.
The reason the shilling collapse is because they increased money supply.
Yes.
And the reason for that was to fund government.
Oh.
Right. So if you go back, you'll see money supply grew at a rate of 30%. 2012 collapse. Government had been growing money supply at 24%. So 30% was mighty aggressive.
Yeah, mighty, yeah.
Right.
Astronomical.
Yeah.
I would say, yes.
So of course that's inflationary. What do you mean by inflation? The actual meaning is that you
increase in money supply.
Increase in money supply, but what that does is that it erodes purchasing power.
Yes.
And when it's eroding purchasing power, you're buying less of everything. You're buying less of fuel. The shilling will buy less of fuel. Will buy less of food.
Are you saying there's too much money chasing few goods?
Yes. Okay. But it also means it will buy less dollars.
Yes.
Because it's, all those are, if you look at it in the most basic terms,
yes.
Those are two commodities, right? So, the shilling, everything else is a commodity to the shilling. So, so it's buying less of one thing and less of the other, and the other, and the other. Then even, Forex will buy less of dollars, less euros, less Uganda shillings.
Yes.
So that's what you saw going all the way to 163.
And what brought it down to 130, 132, 140 overnight?
So there were I estimate 4 forces.
Are Chinese still on holiday?
I didn't know Chinese were very critical to
in this, yes.
The pricing of the shilling.
That's why you are here. Tell us, are they still on holiday? Because some of our viewers tell me, hey man, ask your guest, are Chinese still on holiday?
My goodness, the first time I heard that, I was wondering what drugs people were on.
Yes.
So there are 4 forces, in my view, that allowed it to appreciate.
Yes.
Number 1 is monetary policy.
Yes.
So whilst there's a time they grew the money supply, I think it's post-August.
Post-August last year.
Yeah. Where there was a significant change in how monetary policy is conducted in this country, and I don't think many people are paying attention. We linked the CBR. Initially, CBR was an indicative rate.
Yes.
And I'll tell you,
this show is watched by my grandmother. So what is CBR?
central bank rate.
Okay, thank you.
Apologies. I'm thinking
Yes.
I'm discussing with my fellow economists.
But you are discussing with economists, but the viewers out there are not,
Might not be.
might not be. Yes.
Fantastic. Thank you. You might need to keep
Reminding you.
stay on
No
the straight
problem.
and
No
narrow.
problem. Yes. Yes.
So the central bank rate was for the first time tied to some rates. I think interbank rate and, I can't remember, and I think repo rate. I'm not wrong. So
Yes.
they created a sort of corridor, create sort of like a floor and ceiling of where the rates will be
Yes.
to achieve. So can I go back to the beginning?
Please.
So when you're doing monetary policy,
Yes.
essentially you're just talking about money supply,
Yes.
right? So with money supply, initially we were just direct with monetary aggregates.
Yes.
We're gonna grow money supply by 5%.
By 5% and work towards that.
Yes, because we believe 5% will achieve inflation
This particular
rate
outcome. Yes.
and interest rates of certain levels.
Yes.
So that's how it was done. But then they changed to a pricing regime, to an interest rate regime. So I think, they call it inflation targeting, but ultimately it works out to the same thing. So the question is, at what rate, and maybe I'm not characterizing it properly, but the general theory is,
Yes.
do you want to set monetary aggregates to achieve your economic objectives, or do you want to set an interest rate
To achieve economic objective.
Yes, because an interest rate, if you target an interest rate, then it means something in the capital markets.
Yes.
It means something in the financial markets. It also means something with monetary aggregates.
So it's like hitting more than one bird with one stone.
Sort of, it's sort of like the thermostat.
Yes, the thermostat that achieves more than one desired outcome.
Potentially.
Yes.
So that's where we went to. And now initially the CBR was supposed to be that, as much as a signaling rate. So when they say they're raising interest rate, they mean they're tightening. But if you go to the data,
yes,
because that's supposed to impact on monetary aggregates,
yes,
you get the opposite.
Yes.
So, and it was not once. You'd get, those.
It was kind of an inverse relationship.
Not necessarily inverse,
but opposite.
It didn't matter.
It didn't matter.
Yeah, it didn't matter. It almost meant like whatever. You're tightening, but you're losing. So and like I said, for me, the go-to indicators for me is prices. And one of the most important prices is CPI, right?
Yes.
Which is really an amalgam of prices. So you'd see you're tightening, but inflation is going up. Right? It did make a lot of sense to me. So I used to dismiss it until August last year. Now they tied it to those two rates.
Yes.
And now when they raise rates, ideally it should lead to some tightening. Ideally. Yeah. Because now you're considering endogenous money.
Yes.
The argument being the higher the rate,
yes,
the less people will borrow.
Yes.
Doesn't always work out like that. But that's the thinking.
Yes. There were four. Now that's the first one.
But they what?
Yes.
But there's been tightening.
Yes.
With that regard.
There's some degree with which we can admit that there's some tightening.
Yes.
Okay. The second one.
So the second one is infrastructure bond. Now this is a capital account argument.
Yes.
When you're talking about flows of money, there are two rates to look at. There are two accounts we look at. We look at current account and the capital account. So the current account is really buying goods and services.
Yes.
So financial flows as a consequence of buying goods and services.
Yes.
What a lot of people call the fundamentals.
Yes.
For me, I don't think that's fundamental. Rather, it's not the full picture.
Yes.
But it is something. Now we've got the capital account, which I mean, that's how investment. So FDI, FDI.
They fall within that current capital account. Yes.
Portfolio flows and things like that. So In February, one thing that happened is...
That is February this year?
Yeah.
Okay.
Two things happened. Talk about them chronologically.
Yes.
The first one is we refinanced a Eurobond.
Yes.
That was going money
to mature or fall due
in June.
Yes.
Now that Eurobond was issued. I think we raised about $1.45 billion
US dollars. Yes.
Yeah. The coupon, what we're supposed to pay in June is 2 billion plus interest.
Yes.
So we issued this 1.45.
Yes.
At 10.375%, I believe. And we're able to settle about 1.4 billion dollars. Yes. So we got about I think $550 million outstanding that we should pay in June.
Yes. So that is as a result of the refinancing that took place.
Yes.
Okay.
But as we did that offer, what it would seem is that a light was shone on a parallel issue locally of the infrastructure bond. So that infrastructure bond came in, I think, at 18.6%. And foreigners bought it in a big way. My estimation is they must have done at least 180 billion shillings, because the reason we come to that number is...
And what was the target?
The target was about 40 billion.
40 billion.
Yeah.
So almost 4 times.
Yeah. So but what we typically raise is, for such issues, anything between 40 and 60 billion, depending on available liquidity at that time.
Yes.
In this particular one, so demand of 280 billion.
Yes.
Now, if you say the 60 of that was local,
yes,
that means about 220 was foreign.
Yes.
So that 220, if that was foreign, that you're talking about maybe anything between 1.5 to 2 billion.
2 billion, yes, yes.
That may have come in to pursue that bond.
Yes.
So obviously that will have an impact on the...
that could have been part of the reason as to why.
Yeah, yeah. So all those are to be sold so that you can get shillings to buy. Today, the demand for that paper has pushed that interest rate to below 16%, which is interesting because it's the only instrument that has benefited from that dynamic.
Okay.
If the other instruments which are yielding quite high yields,
yes,
I was expecting to see rotation into that because really it's almost the same instrument, right? So you're chasing yield. You're chasing shilling yield.
Yes.
So why specifically just this one bond? Anyway, story for another day.
The third.
So the third was so the third was momentum.
What do you mean momentum? For the benefit of, I might understand, but for the benefit of the viewers.
So some people are seeing that the shilling is strengthening.
Yes. There are prospects.
Yes.
From it.
So people start exiting, unwinding their dollar positions.
What the DP said, those who dollars those under their pillows should offload them.
There was some truth to that.
Okay. So it's panic selling.
Yes.
If I would call it.
Yes.
Okay. Because of the momentum that they are seeing, there are better prospects from the shilling.
Yes.
So it will be.
So it has started strengthening because these foreigners have put in some shillings. So okay, guys.
So it would be helpful if I sell my dollars.
Yeah. Let me not lose.
Yes. Okay.
Because you know the longer you stay.
Because again, with the fluidity of the market, you don't know how it will be in the future. So you're better off with what you know, which is the prospect that the shilling is currently having.
Yes.
Okay.
So trend in trading, we said don't fight the trend.
Okay.
So the trend is your friend. We say the trend is your friend. So
makes sense.
so you exit.
The final one. I agree. Yes. The ultimate or the fourth one.
The fourth one is CBK intervention.
Human hand. if I would call it quote unquote?
They went back to the supporting.
The propping.
Yes.
Tell us more about this.
We know that there's been some reduction in CBK dollar holdings, and suspicion is that that was pushed into the market. But also, we know the calls were made.
Yes.
Yeah. So those four in concert
could have, yes, they could have jointly contributed to the events that we saw then. How sustainable is this? And are we seeing the dollar going back to 120, 110, or it will stagnate at 130, 132 there, or 140? How sustainable is all these efforts?
The reason, especially with regards to inflation, interest rates, those two prices I never predict, is because largely the central bank has so much control in what there are no trends, there are no economic trends that will predict this. If governor tomorrow woke up and said, I'm doubling money supply, easily the shilling will trade at 170, 180. Right? And there are indications, there are certain dynamics that can push us in that direction.
Okay.
So my only point is, for this to hold, it's a question of FDI.
Foreign direct investments.
Yeah.
Yes.
If investors pumping in
money into the economy,
right,
then that would help in sustaining the momentum and ensure that it kind of stabilizes at that level.
Exactly. Okay. Because it's those monies that then can be used. We've done one blunder.
Yes.
We have paid. The government invested in a lot of assets that have simply not
yielded
any returns,
any
right?
better returns.
And a lot of these were dollar financed, or even shilling financed,
yes.
but they're financed anyway.
Yes.
So SGR, Lamu Port, LabSet,
yes.
all that infrastructure was funded. So all that money means there's a good chunk of it that we need to pay abroad. So infrastructure investments by foreigners can help offset that outflow. Okay. And then, because what's happening now is this quote unquote what we call forced savings.
Forced savings.
Something's biting me. Okay. Sorry. It's forced savings because you see what happens is typically you save, then you invest.
Yes.
But if you borrow, then you invest. Then if you don't make it from the
investment front,
yes,
or you miss it,
then now you have to save.
Yes.
You have to. That money has to be sourced from elsewhere. And that's higher taxes now. Okay. That's
Thank you. As we prepare to shift gears to another aspect of conversation, we know one of the challenges facing the country is the issue of public debt. Please, could you please speak to us about what are some of your thoughts on how best can this public debt be mitigated? One, is the government doing enough, in your opinion, to mitigate public debts? And from an observer perspective, what best could be done to mitigate the issue of public debts? Because one of the things that it crowds out a lot of issues, crowds out development, and a lot is borrowed, and we've even seen attempts to even borrow to pay salaries to some extent. Again, that's a suspicion, but can also be truth checked. But we did not rule it out. So could you please speak to us about that?
But the president's chief economic advisor told you that there are times when they have to make a call on whether they're going to pay debt or pay salaries. So just to give you a picture, as at February this year,
yes,
29th February, the government had collected about 1.3
trillion,
75 trillion.
Yes.
374 trillion.
Through revenue, yes.
Yeah.
Through taxes.
Taxes.
Yes.
Out of that 1.37, we've as at February as well, we've paid 1.15 trillion
Debt.
in debt services.
Yes.
Interest and principal. That tells you that 84% of tax revenues
goes towards debt servicing.
Went towards
debt servicing. Yes.
Debt servicing. So all the spending that we have done,
yes,
since July the beginning of this year,
yes,
was largely debt financed.
Debt financed.
If we don't borrow, we can't.
So you are not ruling out a possibility of some borrowing going towards paying salaries for the civil service.
No, that's exactly what it is. Either we borrowed to fund debt,
yes,
or we borrowed to pay salaries.
Or simply put, we borrowed to run government.
Exactly.
Yes.
Now,
which is again against the PFM law act
that's been overrun by events.
Okay.
Whatever it was supposed to stop,
yes,
it has proved useless.
Yes.
In stopping.
Yes.
So now we are like I was telling somebody we are a debt junkie.
Yes.
We need debt to function.
Yes.
The same way an alcoholic needs alcohol to function.
We become debt addict.
Yes.
If there's a word like that.
Exactly.
Yes.
If government if banks tomorrow said we're not going to lend to government.
Yes.
Government goes into crisis immediately. Immediately. And you're talking about T-bills.
And could that explain why the banks inordinately prefer lending to government than individuals, because they lend at a higher interest rate and the chances of government defaulting are not there, almost not there.
The chances of government defaulting are elevated.
Yes.
And you can see this with the international banks because they know what happened in Ghana.
Yes.
They can say what they want. But we know.
But there's a disconnect between harmonizing what they say and what they do.
There's excuses and reasons.
Yes. One after the other. Yes.
Yeah. The reason I need an excuse is not necessarily it's not the reason why you did something. The reason you arrived late. Your excuse is there was traffic.
Yes.
But the reason is you slept.
Yes.
You overslept.
Yes.
So that's the thing. Okay, it's kind of tough to be a bank now because or an insurance company or a pension fund, because you're required by law to invest in government securities.
Yes.
Yeah, there's some investment that must go towards that. So if government, even if you know government is going to default, there's almost nothing you can do. You must invest, right? But how much you invest now is a question.
The question, yes.
And that's why the government is ever willing to pay higher and higher rates. Why not for the infrastructure bond in February? But why not for the foreigners? It is my belief the government will have been paying 22% on that instrument. But whatever the case, when His Excellency Ruto took over, I think that service to tax revenues was about maybe 1.6%, or 60%.
Yes, that is going to 84%.
Now we're at 84. That number is not going down.
It can only go up.
Yeah.
Is that something good for the country? as you respond to what are some of the ways, in your opinion, that can be done to mitigate public debt against public debt?
Yeah, but clearly it's a problem. It's
it's not sustainable.
Yeah, it's not sustainable.
Lest we borrow to pay again.
Yes, and Ruto thought together with Parliament that the best way to deal with this is to tax more. But we know about the what do you call it? Laffer curve.
Yes.
The very aptly named Laffer curve.
Yes. Arthur Laffer. I'm named after economist Arthur Laffer.
You can only squeeze so much from a stone.
Yes.
So it is my view. The trend is what it is.
Yes.
And it is, and government spending is being driven by two things. Number one, the primary surplus, primary deficit, and debt servicing.
Yes.
Even if we went into primary
Deficit.
surplus, it is still the case. It might still be the case that spending will go up.
Yes.
And it's largely being driven by debt service. And the ridiculously high interest rates you're paying. So,
what needs to be done?
So when
if today became the president of this country,
when the government came in,
yes,
it was probably sufficient to sell assets,
privatization,
yes, and to cut government spending to the bone.
So two things: deliberate cutting down expenditure, living according to your means, and two, considering privatization.
Yes,
and the proceeds from privatization used to settle down the deficit.
Yeah, not the deficit, but the debt.
The debt.
Yes, because there's no more deficit.
Yes.
Remember, if you're spending less than you're collecting.
Yes.
And then now to juice the economy to even generate higher revenues, you cut tax rates.
Okay. And balanced against increased government spending. How would this work? Because one of the ways of making economy do better is, and this is Keynesian thinking, that you put in money, you pump in money into the economy, then that money will circulate, and then eventually the economy will be doing better. Again, some schools of thought have it differently.
That theory,
and that is
has been extensively tested.
Yes,
and has led to failure of many currencies.
Because that is I guess that is what informed some of these initiatives like inclusion funds, the hustler fund, where you put in money in the economy and expect that it has some desired effect.
But you see, if that thinking worked, we wouldn't have been in this hole in the first place. Because that's the exact same thinking that the Jubilee one had
tried. Yes.
And for 10 years, if he was bequeathed a functional economy, no debt problems, fantastic economic platform that just was thriving on its own. And then he made the mistake all the politicians typically make, thinking that they can do the work of entrepreneurs better than entrepreneurs. Because in my view, entrepreneurs are the people who drive the economy, not politicians.
Not politicians.
Yeah.
But the challenge is that politicians make those key decisions that influences a lot.
They don't make. They have the opportunity to make.
Yes.
Not all of them do. This. So like I was saying, if that school of thinking worked, then we wouldn't have been in this hole in the first place, because the previous regime spent like drunken sailors. Invested quite a bit in infrastructure and whatnot, and
so you say this thinking has been tested. There are results out there that it didn't work, and earlier on you attempted to draw parallels or still offline about some of this thinking have been tested in Argentina.
Yes.
And for the benefit of our viewers, could you please touch on in brief before we shift to the next aspect of conversation?
So Argentina is a very interesting case.
Yes.
Argentina in 1900 was at the same level in terms of per capita. No, in fact, in terms of per capita income, Argentines were richer than Americans. But somewhere in 1940, 1950, they lost the way. They elected a guy called Perón, and Peronism was born. Has been practiced in Argentina all the way through to the Kirchner. First her husband, then herself. Actually, both were called Kirchners. And then a hiatus. There was some center-right guy who came in, tried to reform things slowly. That didn't work. He was quickly kicked out.
Yes.
Went back to the left. Peronism went back in
Kick
power.
back again, yes.
By the time they were thinking, maybe this Peronism or
Is the problem, yes.
leftism or Keynesianism doesn't work. Inflation rates are 200%.
Yes.
Unemployment was high. Poverty is stratospheric. I think it's talking about 40 or 50% of the of Argentina. And by the way, Argentina is one of the most naturally endowed
yes.
economies in this world. Maybe at the level of DRC or South Africa, or So clearly it hasn't worked. So this guy comes in. Milei.
Yes.
He's an Austrian economist. In fact,
yes.
He's an anarcho-capitalist. Yes. I don't know if you're familiar with that term.
Yes.
So there are two. So many libertarians. He's a libertarian. So many libertarian economists fall in between either maniachist or completely anarchist.
Anarchist, yes.
He's an anarchist.
He's an extreme, yes. Yeah. From what he's done so far for the last 3 months he's in power, it tells.
Yeah, I mean, this guy doesn't believe in the state completely. Maniacists say you need a small state.
Yes.
This guy,
his first activity was destating.
Yeah.
Yes.
So anyway, so he's screaming afuera. I don't know if you know what afuera means. Afuera means outside.
Yes.
It's just gonna throw everybody, the government outside, right?
Yes.
So he cut the government. He's cut just 1 or 2 weeks, one or a couple of days ago. He's said he's gonna fire 70,000 workers. Argentine government liberalized quite a bit. There's quite a bit of price controls and whatnot. I mean, just essentially following the Austrian economist rule book. So not Austrian economist. Austrian economist is I'm misstating. Following the libertarian rule book. So it's cut. One of the things that has happened is inflation has fallen down.
Yes.
It's cut by half now. Right. Month on month. If you look at it from a month on month perspective,
yes.
it's even more dramatic.
Yes.
We're talking about maybe 2% month on month now. If you analyze that, it's about 24%. Yes. Right?
But and it's just 3 months old into office.
3 months into office. Said he'll take central bank governors to jail if they print more money.
Yes.
So he's clearly interfering with monetary policy. And here we preach a lot of monetary policy independence. Anyway, so I mean, he's done all the reforms he could do towards growing the private sector. That's the whole idea. Because he believes the private sector is the engine of true economic growth. What government does is generally a lot of transfers or redistribution, but not proper economic. We're not creating value. Which brings me to the point I wanted to make about the Keynesian theory. So you when you look, and it's true, money flows in one direction. But what is not visible to people is on the other side of the moving in the opposite direction is value. Once you start destroying value by making it difficult for business to work and create value, for entrepreneurs to create value, that means the more money you're pushing into the economy, it's really inflationary because production is not. Because the thinking with Keynesians is that if there's money, if there's demand, then there'll be supply.
Yes.
But supply doesn't work like that.
It's not automatic.
Yeah. I mean, it takes you maybe 6 months because you need to get into production to import the machinery necessary.
Yes.
So what happens is you borrow instead of producing to consume, you borrow to consume. Inflation supports borrowing, and it punishes production, and that's why value gets less and less
as the money moves slow. Yes.
As you keep pumping in more money, value, because now you're punishing producers, and it becomes more and more inflationary.
Good. Thank you so much for that, and we thank you so much, our viewers. For those who have not subscribed, we ask you to subscribe to our channel, The Point, so that we can able to continue this production. Nderi, could you please speak to us about your thoughts on this G2G, government-to-government initiative that the Kenya Kwanza regime said it was the panacea for our problem with respect to the issue of fuel and because the fuel drives every aspect of the economy.
Yes, energy is critical to economic production, just the same way logistics is also critical to economic, because to produce and take things to where they're needed. So the idea was, the theory was what I was alluding to earlier, where people believe that exchange rates are driven largely by the current account. So if your current account deficit, ideally the thinking is your currency will depreciate, and the thinking therefore is, if you want your currency to stop depreciating, you must locally produce and stop. So import substitution. Of course, there's a lot of data out there that rubbishes that entire school of thinking. America has always run current account deficit. It's one of the few currencies that have actually been strengthening over time. And the one time they were doing current account surpluses was during the Great Depression.
Yes.
When people could not afford to import. So I have no idea why, despite failure of that theory, I mean, even Nigeria trying it, they kept banning imports, but the Naira still keeps doing the moonwalk, the backslide. So I don't understand how a theory can have so much data against it and still continues to hold. I think that's what Krugman called a zombie. It's dead, but it's not dead.
In his book, Arguing with the Zombies.
Yes.
Yes.
So anyway, sorry, what was the question again?
Yeah, the question was your thoughts on G2G.
So G2G was built on that premise.
Has it worked?
Of course not.
It has not worked.
Because the cause of the depreciation was not international trade. And I keep telling guys, the purchasing power of the currency is not determined
externally.
Yes. It's determined by how much you produce.
Yes.
Almost seems like a contradiction of what I'm saying. But remember, a lot of what we produce is very dependent on our imports. So if you look at our biggest imports is imports of energy, imports of
raw materials, in some cases,
machinery, capital goods actually. So and this has never been a problem before. But I sometimes understand, even for those who know better, it's because they know this is a problem, but we are responsible for this. So if to escape blame, let's tell them, excuse versus reason.
Yes. I know I'll be skinned alive if I don't ask this question. Is our economy on autopilot? Or is it anchored on some particular fundamentals that drive and inform what we are seeing in the economy?
So Kenya regionally has one of the largest private sectors in the region. That's what explains. I mean, that's why we're able to compete with Ethiopia with their 100 million. I think they're 150, 160 million.
Yes.
We are 40 million. We're 50 million now. They're 3 times our population, but our output
matches or compete with. Yes.
Yes. Because we have private sector, we've allowed for capital accumulation where they have not. And capital accumulation, some may argue that infrastructure is part of capital accumulation, but I always tell them, look, the capital accumulation need is towards production of goods and services that have value to society. So now, because there's nothing going on in Lamu Port, that's capital that has no value to us. If we was to value that as a business and value it at zero, because there's no revenue.
Yes.
So
we are not on an autopilot.
No.
Okay.
No, I mean, substantively, Kenya is a fantastic economy. Fantastic. It takes a lot to bring it down to its knees, but it's possible.
Then please, why are we, or these are just stories, why are we hearing of stories that investors bypassing Kenya going to Kigali, Dar es Salaam, and Kampala?
Some of those investors are our own people.
Okay.
So, I mean, they could have invested here. They didn't invest here because we become hostile to investment here.
So all this story of ease of doing business improving is a hoax.
It was. So if you want to know the ease of doing business, so ease of doing business is the World Bank had its own, which was
metrics of yes,
which was a purely political tool made by a club of politicians. Because what matters to them,
to pursue a particular narrative for them.
Yes. So you've got a lot of NPLs
there
in trading.
Yes.
You've got a lot of NPLs in manufacturing. So what does that tell you? We are eroding we are killing our businesses. So GDP captures production. GDP doesn't capture financial health.
Yes.
So I mean, if a new business comes and it produces, and it's still at a loss, it's still loss making, it will be captured as production, but the balance sheet effect won't be. It will be felt a few years down the road.
Is there harm that rebasing did to our economy?
So let's go back to
other than removing us from the league of club of members that could borrow from. Yes.
So let's go back to the initial debates. Let me take you back to the 1920s when national accounts was being debated. One of the things was how can you, in aggregate, properly capture the health of an economy. And by the time, anyway, the statistics are out, it's history.
Yes.
It's history. What's the usefulness of those statistics?
Yes.
So that's one of the biggest issues with measuring GDP. Is it a useful measure for capturing health? It's number one, it's a lagging indicator. Number two, it doesn't even. It's like trying to estimate the performance of a company, like using the top line.
No wonder the country, like the people, like the other countries like Bhutan, who left GDP and went for great domestic happiness as a matrix for measuring the state of the economy.
I think that's even worse.
They abandoned GDP. It's an area for interesting studies.
So in the Americans don't just rely on 100% on GDP. Inflation rate is a very important
metric
for them. Interest rates is an important metric, although interest rates can be gamed. I would suggest to substitute for interest rates. Let's work with savings rates.
So did rebasing help us or it didn't help us as a country?
It's just statistics. It's like asking whether
the always simpler way I always explain rebasing is
it better to use inches or centimeters?
Yeah, because they were telling us that there were some aspects of our production that are not captured in determining the GDP. So that's why they had to do rebasing.
Well, what are you measuring, right? Do you need to be accurate in what you're measuring? You see, if
some would say yes,
just for
planning purposes.
There's a whole argument.
Yes, I know.
But what you're measuring is whether you're improving, right? So if NPLs are growing and your GDP is growing, are you really improving?
No, you're not.
If you're focusing purely on
no
GDP.
wonder some politicians said we don't hit GDP.
Yes.
Ideally, if it is growing, it should be able to.
Yeah, and you're just trying to game. Really, you're trying to game the statistic. This speaks to good heart law. If I said interest rate should be a measure of whether the economy is doing well, do you know just to lower interest rates, I'll print more money?
Yes.
By the time the the gold mark was collapsing in Germany, I think I looked at the stats, interest rates were at 6%.
Yes.
But inflation was incredible, right? If you want to measure whether the economy is doing well, so Americans, as coming back to America, so they do have a number of measures. Are people employed more? Are these people earning more and more every year?
Yes.
Because if you're producing, your shareholders should be getting more. Your workers should be getting more. Your
kids on school, sick people attended to in hospitals, all those.
I'm just because it's from a production perspective.
Yes.
I'm just going for the elements of production.
Yes.
Your landlords are earning more. You know, so everybody is better off on aggregate, right? So then you come to the human factors. Life expectancy is growing.
Yes. Maternal deaths.
Because your people are eating better.
Yes.
Science, now that's partly part of, but if people have better access to healthcare, then
yes,
because you're earning
their health
more,
outcomes will be better.
Yeah. So there's all that. But then of course there's shortcuts. Then the governments try to do this. They try to allocate more resources towards healthcare.
Yes.
To show people are living longer and but it's not a function of production.
Yes.
So what you end up doing is you end up starving your production.
Yes.
To game that statistic.
To achieve a particular narrative that is not sustainable over time.
Exactly.
Thank you, Nderi, for this conversation. It was, I must admit, a very nice, insightful, eye-opening, even for me as a host, and I believe our viewers would find it very interesting. And should we arrive at a situation where we are forced to call on you again to come to the show, we will not hesitate. And I want you to look at this camera and give us your final thoughts as we wrap up the show.
Yeah. So thank you. This has always been my view, and right now, I think we're walking into a serious economic crisis. And my view is people should brace themselves, because the government debt statistics are worsening year on year, and it doesn't seem like their strategy of increasing taxes to help fund that is working. So we keep marching on. The sacrifices we're making are not yielding fruit. So the question then is, how do we turn this around? And my considered view is, at the levels where we've reached, I think at some point we'll have to have that discussion of debt default, and that discussion must be held now. How it look like, so that we can get back to the straight and narrow of having what worked with us, especially under Kibaki, what we know that worked for us. So the sooner we get back to that, the better.
The better. Thank you so much, Bwana Nderi. It's been a pleasure having you. And on behalf of the entire crew that made this production possible, we thank you so much. And to our fans and our viewers, we thank you so much for subscribing to the channel, The Point. And those who have not subscribed, we invite you to subscribe to the channel to enable support this production even in the days to come. Otherwise, thank you so much. Until we do this time, this next time, thank you so much, Bwana Nderi. Asante.
Asante sana.
Karibu.